What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you are interested in, consider subscribing, as I do also provide technical analysis for your entries and exits and stocks that I am looking at, as well as a daily pulse on the market on X at Hemi137. So you can check me out there as well. But before we get started, remember to hit the like button and let's go ahead and recap the week. Look what we're looking for 2025 as we are looking to prep for a big year of volatility. So, with that being said, we're going to get into some things today. Happy Thanksgiving for those people that hopefully you got to spend some time with your friends and your family over this past week if you are in the United States. But with that being said, we are still continuing to get a lot of news that is essentially setting up 2025 and what that may look like. Now, there could be a lot of speculation, but what we are seeing is a lot of action coming out of the Trump administration. And this is what is important, is we want to see what policies are established and what can actually take place, as there will be a lot of friction between the current administration and what's actually going on. Even with the current administration still pulling strings, it looks like a lot of things are getting done. Now, we've already talked about some tariffs. Trump talked about tariffs and enforcing tariffs as soon as he gets into office. That has essentially caused Canada and Mexico presidents to reach out to Trump already and stop essentially the drug processing over the border, or stop immigration, illegal immigration coming into the United States. So he's already getting a handle of that. He's already talked to Putin and NATO about slowing that down, so much so that Zelensky, I believe, is actually discussing coming to a ceasefire at this point. So again, he's making a lot of progress and not even actually in presidency yet. So that is good news, as we don't want to essentially have war. We would prefer to be in more of a peacetime where no one is sacrificing lives out there in general. But again, we're not trying to make this political. We're trying to understand the current environment in as much necessary, because of the fact you are dealing with supply chains, and understand how that can affect, especially when you start implementing policy and potentially affecting supply chains. So this is what we have to pay attention to. Again, don't like politics, but it's important to know what's going on and how that is implemented into the economy. So with that being said, Thanksgiving online sales spending has essentially hit a record high of $6.1 billion. So this comes into account, like, what exactly are we looking for as far as is a consumer in a bad position? One thing we can say is, again, the consumer has been spending a lot of money that it doesn't have and accumulating more debt very rapidly. And now with this new buy now, pay later, there's been a lot more use cases for people to be using this, because again, they can't essentially purchase anything outright, even groceries. So people are essentially using this buy now, pay later. But the problem with that being is that it's not reported. It doesn't affect your credit score if you are delinquent on those payments, or if you just stop paying, which we're finding there's a high turnover rate for that's actually occurring. But again, they will not allow those metrics to come out, because again, they don't want to do a hard credit check on people, because it's going to affect their credit scores. So again, you can see how this can be a very hot mess. And one thing we've seen with Affirm and some of these other payment processing for the buy now, pay later, is that what it's doing is it's hard for these companies to become profitable, because again, even though you're getting all this new users coming in and using the platform, the problem is that they're not paying back, and it's becoming again, a large chunk of those loans that go out, or essentially these financial payments that you're doing. Which again, the uptick in people missing payments is increasing. So you're getting the groceries, you're getting whatever it is that you want. It's shown that essentially majority of the purchases are coming essentially for clothing for women, and essentially electronics for men. So with that being said, again, what is occurring is that it is it is going to continue to be a problem, even with the more users that come on board. Again, they can't remain profitable because, again, what you're looking for at this point would essentially be subsidiaries from the government, and that's the problem, is that because you can't become profitable, you're relying heavily on the government to account for a lot of the losses that you're getting. And this is why banks essentially go underwater very quickly, because they're not enforcing any kind of restrictions or penalizing uh, the user in which that they're using their platform. And not doing that, essentially this is why you get massive crashes in the market, because you find out later that the things have been running under hot water, and again, nothing is actually being fixed. And so again, this is a huge problem with buy now pay later. And even though we may see this record 6.1 billion, that is not a good sign. And some other news that dropped this week is real wages have only increased $3 per hour since the early 1970s. So yes, even though your great grandparents or your parents have purchased a house at a fraction of the cost of what they are now, again, nothing has changed. And so even though you may be wondering, Gen Z is wondering essentially, well, houses aren't as cheap as they were back in the day. And even though these real wages that people are saying have increased throughout the decades is not true, right? If you take into account of inflation, we've barely got a $3 an hour increase. But again, things have just been horribly more overly priced. And even just over the past 4 years since the pandemic, even houses have almost tripled or quadrupled the price of what they were, which is absolutely absurd. And something else that is occurring now as well is core CPI, PCE, and PPI are now rising at the same rate. So again, inflation is continuing to come back. Again, in my opinion, I don't think it's automatically just rising. I think it's always been there. I don't think it's actually been decreasing as much as people would like. And that is, again, primarily driven by the massive amount of spending that's going on with the government and the dilution of the actual real rates with these multiple different, essentially, reports that are coming out to try to hide the fact that inflation was still always high. It never really gone away. Because again, you have to understand how inflation works. And again, the consumer is going to try to adjust for given the current economic environment. They can't get loans. Average cost of insurance is so high that it essentially absorbs almost every extra dollar that the consumer has. So again, to see that inflation is coming, yes, you're going to get a seasonal inflation during this time, because people are starting to purchase gifts and stuff like that as well. So you'll see that rotation come out. And then again, a lot of that is dependent on buy now, pay later. So despite them saying that, yes, we are in a strong bullish economy, a golden economy, which again, they're trying to paint that picture now because again, they're going to unwind a lot of this debt in next year and point fingers. This is how they do it. This is how they want to win votes. Again, it's always about winning votes and how you set that up. So with that being said, that's what we're seeing. Now, auto loan delinquency rates have jumped to 8.2 in Q3, the highest in 13 years. Again, auto loans, people can't afford new cars. And now it's getting to the point where even used cars, it doesn't matter. People have been trying to maintain their own vehicles. We've talked about advanced auto parts and how they were exploding over about 2 years ago because people just weren't purchasing new vehicles. They were just too expensive with the price gouging, plus the interest rates on top of that. Even these incentives weren't enough to try to compensate for the massive costs. But being said, people are being put, and this is the problem, is people are extending the loans much further out with minimal down payments. The problem with that being, again, people still can't afford these payments. People are only concerned about the monthly payment. But again, you also have student loan monthly payments that aren't being taken into account either. People are just assuming that that's going to go away, and it won't. So again, if you have signed a contract, you are still liable for that cost. And the average student loan is about $300 a month, even though the average auto loan is roughly anywhere between about $500 to $700 or $800, somewhere around there. And that's not even including insurance on top of that, which insurance, again, is skyrocketed. And if you have a newer vehicle, it's obviously much more expensive. So, again, you can see where the delinquencies start falling in because, again, you're getting massive layoffs. There's no new jobs being created. And so that leads to massive, massive problems. So massive 52% of stock repurchasing has been conducted by the indexes of the top 20 companies. So your Metas, your Apples, your Googles, a lot of these big companies are doing buybacks right now to essentially save the price of their company. This is why essentially everything is holding up, because again they're repurchasing their stock, so it's essentially preserving the stock price during this time. This is why you're getting the Mag 7, because they have a lot of extra cash because of AI infrastructure and that theme that's been pushed out there, which again I believe during this next year you get a lot of understanding of what's actually going on. A lot of these companies will be exposed to what's going on. This is why they're asking immunity from the current administration going into the Trump administration. So you have to understand a lot could be exposed and what that could potentially lead to next year. A lot of these Mag 7 could be corrected. But ultimately, again, we are worried about inflation, and it's something I talked about. And what we really need to be paying attention to, as I've talked about, how different items, data sets will have more weight during certain times. And because we are starting to cut rates, we want to pay attention to the inflation rate. But the problem is with the inflation rate is you have to know what is causing the inflation, what can potentially play out. And I've talked about the consumer in general. The consumer in general is very weak. The average everyday American is very weak at this point. We know that as 18 to 35-year-olds are living with their parents. Their parents are essentially dishing out the biggest working class ever. So maybe living on fixed incomes. They're essentially giving their essentially estates, what they have in their state, what they built over the years, to the grown children now to try to buy homes because homes are just so expensive. Problem with that being is that if some major event occurs over the next couple of years, which we are expecting some sort of manufactured crisis to occur, this could be a very, very bad setup across the board. And so again, this leads into many other things. But what we've noticed over the past week, there was a particular episode that came out from the Joe Rogan show with Mark Anderson. And he has essentially talked about this debanking that's been occurring over the past couple years, and it's been going on for quite a while, but it has been accelerating over the past 3 years under this current administration. And essentially knowing, much like how the United States may sanction a country and taking them off the SWIFT system, so essentially puts you in a very, very bad position where it's hard to do any kind of business. He has brought this debanking back up and highlighted it, and now it's all over X at this point. And understand that this debanking essentially can be used against a business or a person, and now it's being exposed that it's happened to Trump and his son and his wife right after the election, or right after the 2020 election. Is that you can't own a bank, so you can't do any transactions. All your cash is essentially, you have to either put it under a mattress or someplace, because you can't. The banks are not willing to hold it, and there's no direct pressure from essentially the government themselves. It's because a lot of these banks are private institutions, so essentially there's a lot of tinkering, if you will, that happens, or pressure applied from the government to these private banks to enforce narrative. If they don't want to comply with narrative, you will be debanked. It doesn't matter if you're a company or you're a person. If you don't fit the narrative, or whether it could be political reasons, or it could be whatever the case is, maybe they don't want these larger institutions having any kind of challenges with maybe a more innovative company, they will debank you. And then from that point, you have to either remove yourself from that niche, or you are going to have to align with the narrative, or you will not be able to essentially contribute to the current system. And we saw this heavily with what was going on during the pandemic. If you don't conform to the norm, you couldn't be part of the society. And this is a huge problem. This goes against all your rights, right? And understand that it is something that is being highlighted, and it looks like it's going to be treated and addressed here in this current administration, or this upcoming administration, which is a great idea, as it's over leveraged. The government shouldn't be allow you to not be able to contribute if you haven't done anything illegally, right? You should still be able to contribute. And so with that being said, again, it's being highlighted and something that needs to be talked about, because it's not talked about, and there's no one out there that will take your case, right? There's no legal stance that will stop, again, of banks being privatized, that is going to stop you from being able to contribute to society, right? We're all human, we all make mistakes, but on the same token, if it's not illegal, you should still be able to contribute. So again, with that being said, this is being brought to the forefront, and understand how government overreach has been occurring. And this is very important to understand the manipulation that happens. So it's not just a conspiracy theory when all these things start getting debunked, and understand that a lot of this stuff is true. And you see this manipulation happen all the time. And so with that being said, again, even despite there not being a ton of things on deck scheduled going on, there's a lot of progress in headline news and what could potentially be playing out over the next couple of years. And so it's very, very interesting. And again, he brought up good points about it, especially crypto. That a lot of crypto firms that have been coming out and that have been trying to be established have been debanked. And so if you had crypto in your name, that was it. You couldn't run in the banking system, which was a huge problem. And so again, there's some major reform that needs to go on there. So being that said, upcoming week, we got the Fed Beige Book coming out at 2 p.m. Eastern Standard Time. Again, that's going to give you insight into the next monetary policy, expecting a 25-point basis move cut. Aside from that, what we are going to see is non-farm payrolls, which is, again, we're going to continue to watch how there are no jobs. So all the information that was being reported or revised just before the election, again, trying to win your vote. And so manipulation will occur. And so, again, a lot of this is conspiracy theory until it's not. But again, you spend enough time in the markets, you see the manipulation that occurs with the headline news. You know how the algorithms work. You try to position yourself in good position and understand where we can go from here. Again, when I start talking about the markets and stuff, I still think there are some good discount buys, but again, you have to let the market play out. Would I essentially recommend any of the Mag 7 right now? No, because again, they've been running too hot. I've talked about Tesla multiple times, even when it was roughly around the 170 mark, and now it's almost doubled that already since then. And I've talked about the potential it has going forward. But also talking about you're coming into a new year with this debt bomb that's essentially should have gone off 2 years ago, where we've seen it in tech, it absolutely smashed. And now what we're seeing is we're going to a new year. Will inflation start roaring back and touching back on that? It really depends on what the spending is like from the government, right? You have to understand banks are bailing out. Now, how would that look if you're talking about reforming and policy? Again, that stuff takes time, but again, manufactured crisis could cause a major problem, right? You have a lot of these chief financial advisors that are on these companies that are resigning because of what could potentially play out next year, which could be massive, right? That could be a massive crash on all the fraud being exposed. But we'll have to see how the market takes it. Just because it's being announced isn't so much a worry or concern. We have to see how investors will take it, and that's ultimately what matters. So again, there's a lot that's coming into this new year. It's trying to digest everything, but this is why I say you can only look about a month or two out and try to take it from there. To try to look too far ahead, just know when to apply risk and know what the odds are for risk greatly improving. And know your cycles. Your cycles help because a lot of it does fall in line with cycles. Take advantage when you can and when you can't. So monetary policy, December 18th. is the next big monetary policy. Again, that will have summary projections of 2025. Again, the two closest projections are the best ones you want to be looking at. Anything beyond that can change dramatically. We've talked about that so much. In being in any market, you have to understand you can't be 100% all the time, but you have to know the probabilities of something happen. And that's how you succeed, is knowing probabilities, knowing when to take risk and not be buying stuff at the tops, knowing let stuff sell off if it's at a heavily discounted price. Then you take advantage of it and understand that there are some, again, really good values out there even right now that haven't been running up. But again, you have to understand you're going that tax harvesting season right now. So a lot of people are selling at losses because you have, for tax purposes, going into the new year. So then core inflation is on the 11th, and then we get into our January numbers. So upcoming earnings, again, earnings are going to continue on till the remainder of the year, and then we'll get our new earnings in January 15th. That will be very important, as we're going to start getting bank earnings around that time. So right before we start getting the transition on the 20th of January for Trump, you're going to start getting some major earnings coming out around all that same time. You're going to also get the discussions about port strikes are going to come back. Student loan forgiveness is going to unwind around that March time period, I think. And then you're going to get true numbers on essentially the job numbers, which again are reflecting it could be over 1 million job losses that we've had with all these revisions that are going on. We don't have official numbers, and that's just going to be on the first part of 2024. And then you'll get another revised list here coming out following that. So again, things will get much worse before they get better. This is why the Fed started cutting, because they're aware of this. But the question is what are the next actions? Again, if we start cutting on spending, the government starts cutting on spending, we'll have to see how that's played out. So again, it's going to be very important on the actual actions that are being taken, not just discussion about things. We need actions being taken. This is why Trump was elected, because people want more action as opposed to talking. The talking, you could debate about it for years and years, nothing ever gets done. You need action, and what's actually going to change things. And so that's why Trump was reelected, and he has believed to be a good team to be able to do that, to actually take the action that is necessary in the best interest of the people. So with that being said, well, we'll see. So there's a lot that could unwind during that time. Now, again, we're getting into a low volume time period with the holidays. So do keep that in mind. We're seeing that reflected in expected moves. Again, we're back down below normal at this point, with SPX only a 53% move this week, or 53-point expectation this week. Tesla is still high just because of the potential there. I've talked about that many times. That's up near 20. That's normally around, over the past couple of years, it's only been about I think 11 or 12 points, just because of the inflation concerns and a lot of, I think the current administration really held down Tesla for the past couple of years from what you saw in Nvidia and some of these other companies. But again, it's up back near 20. Boeing's roughly about the same, around 6. It fluctuates between about 6 and 7, so that's about normal. Again, could be a lot of fraud there. Would be interesting to see what's being exposed there coming into the new year, especially with all the kickbacks that go on, all the money that Boeing gets. And again, they're just not producing great products at this point. And again, surprise, it's sitting at $140. You got JP Morgan, which is much higher. Again, JP Morgan typically sits around 4 or 5. The fact it's up at 6 is interesting, as we have the job numbers, which could have a big impact. So if for some reason the job numbers are bad, this definitely would be a week to take advantage of SPX. If for some reason it's unexpected, the market starts rapidly selling off, this is a time to take advantage of the index options this week. If it does play to that, we're not really sure. I still feel like the current administration will try to save face going into the new year, and then they'll offload everything in the new year. Maybe not. We've seen some numbers come out that are starting to reflect things being bad. This is much like 2007 going into 2008. There's a lot of comparisons between that time period, the great financial crisis, and the dot-com boom with AI. I think AI is kind of in of a bubble, but much like the internet and the dot-com boom, again, it was great technology, but again, probably about 80 to 90% of the use cases out there are garbage. and everybody's trying to jump into it. But again, understand the technology behind it is extremely useful and beneficial and can rapidly help us grow to a wildly crazy part in our lives. So you have to understand that. But with that being said, on the same token, what we're looking at is you got to go through, you got to get out of this boom cycle, and it needs to correct, because again, 80 to 90% of it don't have great use cases. And we've talked about the good use cases there's very minimal amounts, because right now you're just building the infrastructure, and then it will be software coming in the next 1 to 2 years, and we'll start to see that. And then humanoids on top of that. So which is something I talk about all the time. So, but that's what we got. So again, not expecting much this week. We should have some good data, again, setting up for 2025. You have your lists prepared, and then get ready to buy if they're, again, heavy discounts. Always try to take advantage of the market when you can if it's already heavily discounted. But just have cash on hand, because things can get wildly out of control, and you definitely want to be able to take advantage of that. So again, none of this financial advice. Have a great day, and I'll see you on the field.